Everybody, welcome to the first official video on how to learn how to trade Forex. So, before this video starts, take a bunch of notes on every single section that you see in the course. Even on the webinars I'm going to be releasing, take notes. On every section, notes. Take notes, lots of notes. Study. It's as simple as that. Alright? So, in this video, I'm going to get right into it. In this video, we're going to be talking about basic terminology. So, we're going to start off with what a pip actually is. So, you can pretty much think about a pip as how much the market is calculated in movement, I guess you could say. But the actual definition of a pip is pretty much it's a standardized unit, and it's the smallest amount of which a currency, I guess, can be quoted when it moves. That's pretty much what the definition of a pip is. But anyways, so how to actually calculate market movement. So it's as simple as on TradingView, you have a tool. This is your pip counter. So you can see 94 pips is what the market moved. So from here to here, the market moved 65 pips. Now, we're going to start off with micro pips. 10 micro pips equals 1 pip. So as you can see, I'm on USD JPY, and here, this is price. Right? So as you can see, price moving. So right now, price is currently at 109.332. So if the market were to go from 109.330 all the way down to, let's say, yeah, perfect, all the way down to, actually that's not good. So from 330, let me go down time frame. It's a lot harder to see the pips. So the market went down from 330 all the way to 300. The market moved 3 pips, because if each micro pip is 10 pips, and 1 pip obviously being its 10 micro pips, that means if the market went from 109.330 to 109.300, the market went down 3 pips, and it went down 30 micro pips. So you can see 330 all the way to 300, 3 pips. So you can see it went down 3 pips and went down 30 micro pips. I'm going to repeat this again. 10 micro pips equals 1 pip. It's as simple as that. I'm not going to be fucking telling you guys what a pip is for an hour. So just get right into it. So other than that, we're going to be talking about spread next. So the spread is a difference between the bid and ask price in the market. So this is pretty much what brokers give you. So you'll normally see that on your MT4, but it's as simple as that. So I'm gonna have a picture up on the screen of spread, and you could study that picture a little more, but I'm not gonna go into that picture too much. Now, leverage is something that's pretty important. I say any leverage that's from 1 to 500 and up is good leverage, because Traders Way, once I made my first a couple grand in Traders Way, I had initially had a 1 to 1000 leverage, and they automatically lowered it to 1 to 500 leverage, so that doesn't even matter. So I've been trading recently with a 1 to 500 leverage, but of course, if a broker allows you to have 1 to 1000 leverage, that's perfect. Always go for it. So leverage is pretty much the ability to control large amounts of money. So if you have 10K in the broker account and you have a 1 to 1000 leverage, you have access to use that full $10,000 in one trade. You can pretty much think about it as that. Other than that, there's brokers will give you rollovers and swaps. So pretty much if let's say you place a trade at 4 p.m. or no, let's say you place a trade at 10 p.m. on a Monday, and then you wait 24 hours. If you let the trade go past 5 p.m., then you will get charged with rollover and swap, which is just another small fee that brokers will charge you to hold the trade. And obviously brokers allow commission, or they charge commission. That's how they make their money. So commission is based off of lots. So if you have a standard lot, I believe they charge $8, and if you have a 2 lot, then they charge $16, and it goes up by $8 each time, I believe. But that all depends on your broker. You can contact your broker and learn more about the commissions that they charge. So other than that, we're going to talk about bullish, bearish, short, and long. So bullish is pretty much buyers. You can think, whenever someone says bullish, you think about buyers or the market going up. So this right here is a bullish candle, meaning that there was a lot of buyers in this candle. Now bearish is obviously the complete opposite. Bearish means that it is a candle with sellers, or that the market is decreasing in value. So this is a bearish candle. As you can see, when this bearish candle formed, it came and brought the market down. Now, if you were to do math on obviously how much the market moved, so from this candle, the market was at 109, 118, as you could see from price on the right side of the screen. This candle started off at 109, 115, and ended up at 109. Let's just say 109, 300. The market moved about 20 something pips. So as you can see, the market moved 20 pips. And it all comes into correlation. Obviously, you don't have to do math every single time when you're trying to calculate how much pips or markets moved. You have your pip tool, I guess, pip calculator. And it's as simple as just click and click, and then it will tell you how much the markets moved pip wise. So when you're in on a long position, that means you're in on a buy. When you're in on a short position, that means you're in on a sell. Or you could just say I'm in on a buy, or I'm in on a sell. Simple as that. Obviously, it's kind of self-explanatory, but I'm just going over these things for people that are 100% new to trading. So now, let's say you're on TradingView and you want to switch through time frames. On the 1 month, one candle represents a whole month of market movement. On the 1 week, one candle represents a whole week of market movement, and so forth. The daily, one candle represents a whole day of market movement. And by the way, if I haven't told you already, these are called candles, and this is the candlestick chart. But you could switch through charts here, which obviously I recommend to stick to the candlestick chart. Now, in this course, you will see me later on use the line chart, but I do explain that I only use the line chart to draw support and resistance. Now, if you're wondering what these red and blue lines are, those are my estimated moving averages. So I'll be getting into those indicators later on as well. Now, like I said again, we're on the 4-hour time frame, meaning one candle equals 4 hours of market movement.